All right. What's up, guys? I hope you're doing well. James here from jamesdforsythe.com. And with me promising, especially a couple days ago, kind of going more in depth in FedNow, and as I've been kind of researching more into the actual service of FedNow, it's becoming kind of more and more interesting in a way. So I kind of wanted to go over some of the core features and stuff that they have. Right. So just like we did with the central bank digital currency videos, where it was a paper by the BIS and a collaboration of different central banks, basically just kind of looking at the core features that they're kind of, I guess you could say, marketing to provide in a way. Um, Basically, that's what their aim is, right? And so, with that being said, we'll head straight over to a screen share here. Okay, and just kind of a little bit more on, I guess, an intro of what FedNow is in general. It's basically a instant payments service for the Fed, right? Basically, it reminds me a lot of Swift. I guess vaguely of Swift. 'Cause obviously not the same thing, but just kind of the messaging part of it. And I'll make a separate video going more in depth of like how the actual process would work as they outline it. um, but for this video, we're just going to stick to the core features. Basically, it's a service where funds will settle between participating financial institutions, which they call FIs, instantly. And so, which means no buildup of interbank obligations and short term credit risk, right? So, they're kind of, by doing this kind of instant payment to where there's like settlement between financial institutions. Um, Basically trying to, I guess, streamline payment processes in a way. And so the FedNow service will provide a springboard for financial institutions, FIs, to offer innovative instant payment solutions and help them meet the growing demand for these services. And so one of the things that I talked about in a previous video, basically about how FedNow really seems to be kind of setting the infrastructure for a CBDC, right? Or could be thought of as such, right? And so, kind of keeping that in mind, that's one of the reasons for the study. And one of the reasons why we're going over the key features, not just so that we know kind of what FedNow is in general, but also so now we're looking at the FedNow, and then we're going to try to compare that later to the core features of a CBDC, right? Or how they describe the core features, right? And so just keeping that in mind. And so basically, it'd be used for financial institutions. Individuals would basically like send a message to their bank or whatever by like how you would normally do for sending money in a way. And then the bank would do all this stuff on the back end. I'm not going to go too far in depth in that actually. Again, getting ahead of myself, but that'll be in a separate video going more in depth, right? So the whole point is basically this service will debut in 2023. I think it was between May and July was the kind of set date somewhere where they're aiming. And they're going to basically put it out in phases, where the first phase is really like the core functionality for a few use cases, as they put, and go from there. Now, it's supposed to be use case agnostic to where they don't care what the use case is and it basically just works. Um, but we'll get more into that separately, right? So it's the whole 24/7, 365 type of payment service is the whole point. Now, there are some nuances I've found, and that's the thing that's kind of, I guess, interesting with these is going through like say 10 different sources, they all kind of describe things slightly differently, and so there's like different nuances that kind of pop up in between, like with how FedNow would work with FedWire, I believe, off the top of my head, and like depending on when basically business hours end, how exactly would that roll over. But FedNow technically would still be functioning 24/7, but maybe the payments wouldn't settle instantly in a way. um that was kind of a side thought, we'll say, in one of the papers. So we'll do that separately. But anyways, in terms of the core features, so basically it'll provide settlement flexibility for correspondent relationships. And so they describe this as participants may settle payments through the FedNow service in a master account of a correspondent financial institution. And so basically, This would facilitate access to the FedNow service for eligible FIs that wish to settle using a correspondent or may not have a master account. And so basically, this is supposed to kind of, I guess I should say, it seems like FedNow would basically extrapolate the use of a reserve account at the Fed, right? To where you're not just having depository institutions who have access to bank reserves in a way, because the way they describe it really does sound like a reserve account at the Fed, which is kind of where the idea of this being kind of the beginning of a possible central bank digital currency is that if you kind of extrapolate that to the population as a whole, where individuals have this FedNow account or whatever. From what I've read so far, it seems like it's more of financial institutions in general, and then basically there's still that financial institution is an intermediary in a way between individuals or businesses and the Fed, right? Is what it kind of seems to be, which would fall in line with what they were describing in that series of papers by the BIS and the collaboration of central banks for CBDCs, right? Where it was really going to be a tiered system where you had the central bank and then you had basically the current financial infrastructure basically being outsourced, the services and other things that in the American case, the Fed would not provide, right? Or does not have a lot of experience providing, like customer service and that sort of thing, right? And so basically, it seems basically like a settlement service, right? To where you have instant settlement, and then basically they can report uh, transaction by transaction, as you see with this fourth feature here, highlighted so it pops up. Um, But yeah, that feature itself seems rather self-explanatory. But so another one would be liquidity management transfers. And one thing I wanted to point out was this final sentence saying limits for liquidity transfers will exceed the customer credit transfer limit in order for participants to maintain adequate funds in their accounts at all times. And this is one area where I'm thinking we need a little bit more information because it's talking about maintaining adequate funds, but it's also like they talk about not necessarily needing pre-funding for said master accounts. And so if it's basically like a reserve account where you're essentially just keeping score, for lack of a better term, on a ledger, then it's kind of like, I mean, what are the limits for besides basically to control the flow in a way, right? And so you really kind of see that with the talk of central bank digital currencies, where they would basically put price caps or flow caps, however you want to describe it. Basically, you can only send a maximum amount, or you can only spend a certain amount in a given amount of time. So whether that be a flow in or out, or an actual kind of magnitude in a way, and kind of going from there. And that's something we talked about quite in depth in those videos. And so obviously, there's always got to be fraud mitigation tools. That's pretty much one of the major selling points for CBDC. And any time you see any type of, I wouldn't even call it monetary reform. I don't think that's the right way to put it. But they're always talking about fraud. And basically, yeah. My thing is it says optimal fraud tools or optional fraud tools will include negative lists, which to me sounds like kind of like a blacklist, right? To where there's certain institutions or entities that aren't allowed to use such service or certain things. And so it's basically like a way to, I guess, separate the non conforming entities in a way for whatever form of basis you're kind of screening these participants in, right? Basically, kick people out of the system in a way, or at least in this service, right? And so also there would be a maximum transaction value limit, kind of the price caps I was talking about a second ago. So it seems for planned credit transfer transactions, this will be basically half a mil. and then participants will have a default limit of 100,000, right? And then an option to adjust it up or down. And so basically, again, this is to prevent fraudulent transactions, but it's also like if you're going to commit fraud or money laundering in a way, it's like, are you really going to use FedNow? Or I mean, there's other ways you can do it, I'm sure. And it's not like it. Anyways, I don't know. It's just kind of redundant, which I guess is the whole selling point of the FedNow in general. They even explicitly state that the whole point, or not, I don't want to say the whole point, but basically the hope is that it would strengthen the system to a certain degree due to its redundancy and basically having a parallel system in a way, right? From kind of the private financial system, I guess you could say, and how that would work. Or payment system would probably be more accurate. With this, another core feature would be you could request payment from any form of recipient or other participant, whether it be a business or individual. There would be support for exception processes, right? And so there's something that I need to look more into as well. And so basically, the ISO 222 messages, right? I guess 20022, however you want to say it. But basically, these exceptions would be like a request for return, request for information, or request for status, right? And so it seems like a lot of the times, FedNow is basically a messaging service, is what it seems like in a way, or at least part of it from what you would see as a end user, right? This also the FedNow would interact with Fedline, right? And this is the first time I've heard of it, to be honest. That's kind of the whole point of doing the research and stuff is you kind of just stumble across and figure it out as you go. Um, but yeah, it seems basically like FedNow sounds a lot like the infrastructure for a CBDC, and I'll probably find the paper from the BIS and the collaboration of central banks. Basically explicitly put them side by side and go through it that way just to kind of see and compare and contrast and that sort of thing. They also have different participation types, and so basically you would either be able to send and receive or receive, right? And so sort of transfers it, I mean, it's pretty self-explanatory, I would think, participating in the system. And then in terms of the actual like services and stuff for financial institutions, there would be settlement, which would be designed for correspondent institutions who settle transactions on behalf of their respondents. So really kind of individuals and end users, whether they be businesses or otherwise, um, basically outsource this source or outsource this service. So, and then again, liquidity management transfers. Yeah, there's different types of end use cases that this would be used for. And also, I guess finally, here's kind of a graphic that you'd see. And I'll go kind of through this step by step and go through it a few more times for you guys and just kind of see how it would work, right? So you really have the Fed now with the reserve bank, with the reserve banks, and this is the service kind of within this middle box, right, where you have basically the sender and the receiver financial institutions, and then basically it seems like the sender and the receiver are kind of outside of the FedNow system, and it's basically just like the first step. I even think they explicitly state. Um, they initiate a payment by sending a payment message to its financial institution through an end user interface outside the FedNow service. And so they explicitly say outside, right? And so I'm really going to try to find more in depth papers or something because I wasn't able to find kind of an explicit, like, this is how the master accounts are working sort of thing. And so, really trying to kind of get more into that, right? Come on, there we go. So with that being said, we're going to leave this one here. Those are just some of the core features for the possible FedNow service, at least in the beginning phase, right? Because again, they're going to basically tranche it out and release it slowly in a way, just kind of give markets and kind of the current monetary system the ability or the time to adjust and kind of try to understand, especially since you have kind of your typical providers and other kind of private sector services that are essentially just intermediaries of FedNow, is what it seems. And so you basically have to deal with that, right? They got to figure out and they have to innovate, and then they have to kind of build their side of things as well, right? So with that being said, I'm going to leave this one here. So I hope you guys have a good night, and I will see you on the next one.